Welcome back to our practice set for preliminary engagement activities, planning, and materiality. And ladies and gentlemen, we are down to our final 20 questions. We are finally going to answer questions 31 to 50. So let's go right ahead and take a look at question number 31. An auditor is required to establish an understanding with a client regarding the services to be performed for each engagement. This understanding generally includes, and let's take a look at our choices. Letter A says the auditor's responsibility for determining preliminary materiality and audit risk factors. Letter B, the auditor's responsibility for ensuring that the audit committee is aware of any significant deficiencies in internal control that comes to the auditor's attention. Letter C, management's responsibility for errors and illegal activities of employees that may cause material misstatement. Letter D, management's responsibility for providing the auditor with an assessment of the risk of material misstatement due to fraud. So in this instance, we might encounter some little bit of confusion because it would seem like all four choices have some ring of truth to it, right? So the idea here is that we base it on the premise of the question or the statement that an auditor is required to establish an understanding. Why must the auditor establish an understanding with the client? Well, at the heart of it all, it is to reduce the possibility of misunderstanding. Now, I have to tell you that most of the statements that we have here from alpha to delta, like I said, have some ring of truth to it. So, in order to draw out the best answer, you choose the scenario or the statement that reflects an interaction between the client and the auditor. That should lead us to the best choice. Okay. Now, if you take a look at the four, there is only one choice here that shows an interaction between the auditor and the client, and that is actually choice B, the auditor's responsibility for ensuring that the audit committee is aware, right? So there is an interaction between the auditor and the client, in this case represented by the audit committee. Do take note that this responsibility to make the audit committee aware is only for significant deficiencies that come to our attention. We do not design the audit to seek or to look for significant deficiencies, but should they come to our attention, then we have a responsibility to report it to the audit committee. We need to establish this understanding to minimize confusion, okay, or we need to establish this to minimize misunderstanding with the client with regards to this responsibility. Now, if you take a look at alpha, while it is true that is our responsibility as auditors, but there is no interaction, right, between this responsibility and management. Similarly, when you talk about letter C, while management is responsible, right, for the implementation, detection, and evaluation of misstatements, but do take note in letter C, it says for errors and illegal activities of employees that may cause material misstatement, again, there is no specific interaction between management and the auditor. Also, side note, the personal illegal activities of the employees are not part of management's responsibility. That's just a side note, okay? And in the case of letter D, we have also to take note that it is actually the auditor who makes the assessment of the risk of material misstatement due to fraud. Okay, so that makes letter B as our answer for question number 31. 32. Prior to the acceptance of an audit engagement with a client who has terminated the services of the predecessor auditor, the CPA should, in other words, what should the successor auditor do? Letter A, contact the predecessor auditor without advising the prospective client and request a complete report of the circumstance leading to the termination with an understanding that all information disclosed will be kept confidential. But we do know that it's not letter A because the communication between the predecessor and the successor must be with the blessing of the client. So it can't be letter A. Letter B, advise the client of the intention to contact the predecessor auditor and request permission for the contact. That sounds right, but let's put it there and evaluate the remaining two first. Letter C, not communicate with the predecessor auditor because this would in effect be asking the auditor to violate the confidential relationship between the auditor and the client when we're saying, well, you are allowed to communicate for as long as the client gives permission. Letter D, accept the engagement without contacting the predecessor auditor, since the CPA can include audit procedures to verify the reason given by the client for the termination. And to this, we remind the successor auditor that it is actually their responsibility to initiate contact with the predecessor auditor. So the correct answer is bravo. 33. Preliminary knowledge about the client's business and industry must be obtained prior to the acceptance of the engagement. We actually evaluated a similar choice in the previous video, right? So when you talk about preliminary knowledge about the client's business and industry, this must be obtained prior to the acceptance. A detailed knowledge of the client's business and processes and internal controls will then be obtained after acceptance. But if it is preliminary knowledge, it must be obtained prior to acceptance. And why must it be done? Primarily to letter A, determine whether the firm is independent. Letter B, gather evidence about the fairness of the financial statements. Letter C, determine the integrity of management. Or letter D, determine the degree of knowledge and expertise required by the engagement. Do take note, we are getting information or knowledge about the business and industry. So the correct answer is delta, right? Determine the degree of knowledge and expertise required. Number 34, the use of an engagement letter is the best method of documenting, number one, the required communication of significant deficiencies in internal control. Do we communicate deficiencies in internal control by use of an engagement letter? The answer is no, because the engagement letter simply contains the terms of the engagement. It is not where you document your findings. Your findings will be documented in your working papers, not in the engagement letter. Similarly, with statement 2, significantly lower materiality levels than those used in the prior audit is again documented in the working papers and not the engagement letter. Statement 3, the description of any letters or reports that the auditor expects to issue is most definitely part of the engagement letter that sets the expectation of the engagement outputs. And number 4, notification of any changes in the original arrangements is also part. So the answer to this is 3 and 4. That should be choice B. Moving on to question number 35. As the acceptable level of detection risk decreases, and we stop and we try to imagine how our response will be if the acceptable level of detection risk is decreased. So our threshold, our tolerance is decreased. That means we are becoming stricter. So if you are stricter, you may change the letter A nature of the substantive test from less effective to more effective, which sounds about right. Letter B, assessed level of inherent risk to a higher level. But we remember inherent risk and control risk, they cannot be controlled by the auditor. So we do not respond by changing inherent and control risk, right? Because we can't change them. Letter C, timing of the test of controls by performing them at several dates rather than at one time. Or letter D, timing of the substantive test by performing them at interim rather than at year end. In the case of choice D, this actually reflects a more relaxed auditor. And in the case of choice C, the performance of tests of controls is actually dependent on whether you intend to rely on the controls. So the best answer for question number 35 is alpha. We choose more effective procedures because we are becoming stricter. Number 36. Which of the following non financial information would an auditor most likely consider in performing analytical procedures during the planning phase of an audit? Now, we know preliminary analytical procedures are required to be performed at the planning phase and they help you spot red flags. Now, one of the things that make analytical procedures unique and interesting is that it actually uses as a benchmark your expectations. So you compare how the client is performing, what the records of the client and balances of the client is saying versus what your expectations are. So in this case, which of the following non-financial information would most likely help you reach reasonable expectations? Okay, letter A, square footage of selling space. Letter B, management's plans to repurchase stock. Letter C, turnover of personnel in the accounting department. Or letter D, objectivity of audit committee members. Now, the objectivity of audit committee members are not expected to directly have a say in the amounts and the balances that will be reflected in the FS. So it's not likely letter D. When you talk about the turnover of personnel in the accounting department, well, number one, it's just in the accounting department and not really the bulk of the operations of the entity. And number two, when employees resign, they would most likely be replaced anyway. So payroll might still seem to flatline. So not letter C, not likely letter C. And letter B, management's plans to repurchase stock is precisely just that. At this point, they are plans. And so therefore, the best answer would be letter A. By looking at the square footage of selling space, you can come up with expectations, for example, with regards how much rent the company is likely paying, or if they are not paying for rent, then the depreciation that is likely to be charged to the selling expenses, or maybe even an estimate as to sales if you look at the dimensions of their selling space and the inventory that they are carrying in the selling space. So it allows you to come up with expectations. That's why the answer is alpha. Number 37, the concept of materiality would be least important to the auditor in determining letter A, the need for disclosing a particular transaction or event, letter B, transactions that should be reviewed, letter C, the extent of audit work planned for particular accounts, or letter D, the effects of the auditor's direct financial interest in a client. So concept of materiality would be least important in the case of direct financial interests, right? This would lead us to the code of ethics, where the code of ethics says in the case of direct financial interest, the value or the amount is not considered. Direct financial interests, no matter the amount, is automatically a cause of a threat to your fundamental ethical principles. For a financial interest to consider materiality, it has to be indirect. So Code of Ethics is saying in the case of indirect material indirect financial interests, they would cause a threat. But in the case of direct financial interest, regardless of the value, regardless of the amount, it's automatically a threat. So materiality is least important in the case of direct financial interest. Moving forward to question number 38. Before accepting an engagement to audit a new client, a CPA is required to obtain, take note, it's before accepting an engagement. We are required to obtain letter A, the prospective client's signature to the engagement letter, letter B, a preliminary understanding of the prospective client's control environment, wherein you're already talking about internal controls, letter C, understanding of the prospective client's industry and business, or the prospective client's consent to make inquiries of the predecessor auditor, if any. Now, to this, there could be a couple or more correct answers as well. And as per usual with auditing theory, we do have to find the best answer. The possible correct answers to this are the signature to the engagement letter, the understanding of the industry and the business, as well as the consent to make inquiries of the predecessor auditor. These are all likely answers. We have eliminated letter B because when you talk about internal controls, you obtain that understanding after you have accepted the engagement already. So of the three, the signature to the engagement letter, understanding of the client's industry and business, and prospective client's consent to make inquiries of the predecessor auditor, which one is the best answer? The best answer, actually, if you remember, we are required to determine, or we are required to consider the integrity of the client. So in cases whereby there is a predecessor auditor, we must obtain, there is a requirement to obtain the prospective client's consent, okay, to make inquiries of the predecessor auditor. This will help you determine whether to accept the engagement or not. Concurrent with that, or even after determining that the client indeed has integrity, then you can obtain an understanding of the client's industry and business to check whether you have the necessary knowledge and competence to perform the engagement. And once the terms of the engagement have already been agreed to, then that's the time we craft the engagement letter. Number 39, the auditor will not ordinarily initiate discussion with the audit committee concerning the letter A, extent to which the work of internal auditors will influence the scope of the examination. Letter B, extent to which the change in the company's organization will influence the scope of the examination. Letter C, details of potential problems that you believe may cause a qualified opinion. Or letter D, details of the procedures that you intend to apply. We do not ordinarily communicate or discuss with the audit committee the details of the procedures we plan to apply. As like what we have mentioned, we still do need to have that element of surprise in the audit, so we do not bear to the audit committee all of the procedures that we intend to apply. So delta for 39. Number 40, in planning the audit engagement, the auditor should consider each of the following excepts. Take note that we are still on the planning phase. Which of the following will you not consider? Letter A, the kind of opinion that is likely to be expressed. Letter B, anticipated levels of control risk and materiality. Letter C, the entity's accounting policies and procedures. Or letter D, matters relating to the entity's business and industries in which it operates. Again, do take note, we are still in the planning phase. We do not plan our audit in accordance with the opinion that we would likely be expressing, right? Otherwise, this will make the auditor, this will subject the auditors, or this will put the auditor's objectivity at risk. If at the very start you are already targeting a particular opinion, then this will put your objectivity at risk. So therefore, we do not consider at the planning phase the kind of opinion that is likely to be expressed. So in this case, beginning with the end in mind is not a good advice. Okay, it doesn't apply to the audit. We do not start with the opinion that we will likely express and then work our way back. It doesn't work that way. So whatever findings we have throughout the course of the audit will dictate the opinion and not the other way around. So this should be alpha. 41. Company A has a few large accounts receivable that total 1 million. Company B has a large number of small accounts receivable that also total 1 million. The importance of a misstatement in any one account is therefore greater for A than for B, considering that A has a few large accounts receivable balances. There are only very few of them that share the 1 million. This is an example of the concept of letter A, account bias. Letter B, reasonable assurance. Letter C, materiality. Or letter D, audit risk. The answer, of course, is materiality. Number 42, in designing written audit programs, an auditor should establish specific audit objectives that relate primarily to the letter A, timing of audit procedures, letter B, financial statement assertions, letter C, cost benefit of gathering evidence, or letter D, selected audit techniques. So, in the overview of the audit process, we did say that it all starts with management's assertions, it all starts with financial statement assertions. And to the financial statement assertions, the auditor creates the audit objectives. So the objectives closely follow the financial statement assertion. So we establish our specific audit objectives in relation to the FS assertions. So the answer is bravo. Number 43, which of the following statements is not correct about materiality? Letter A, an auditor's consideration of materiality is influenced by the auditor's perception of the needs of a reasonable person who will rely on the financial statements. Letter B, an auditor considers materiality for planning purposes in terms of the largest aggregate level of misstatements that could be material to any one of the financial statements. Letter C, materiality judgments are made in light of surrounding circumstances and necessarily involve both quantitative and qualitative judgments. Or letter D, the concept of materiality recognizes that some matters are important for fair presentation, while other matters are not as important. So, out of the four statements, there is one that is not correct. And the incorrect statement is actually letter B. Because when you talk about materiality for planning purposes, it is in terms of the smallest aggregate level of misstatement. Again, you're talking about your threshold, your tolerance, right? So it's the smallest level that will tip off the scale. So it's not the largest aggregate, it's the smallest aggregate level of misstatements. So the incorrect statement is bravo. Number 44, the element of the audit planning process most likely to be agreed upon with the client before implementation of the audit strategy is the determination of the letter A, procedures to be undertaken to discover litigation claims and assessments. Letter B, pending legal matters to be included in the inquiry of the client's attorney. Letter C, timing of inventory observation procedures to be performed. Or letter D, evidence to be gathered to provide sufficient basis for the auditor's opinion. Take note, this is an element of the audit planning process that will most likely be agreed upon with the client. So in this case, we talk about uh, we talk about what needs to be agreed with the client, and we have been mentioning actually in the previous questions that we still need to inject some element of surprise into our audit procedures, and we don't disclose to the client the details of our procedures, except for when we talk about inventory observation. Now, take note, according to the PFRS, our clients are required to conduct an annual count. The auditor observes the annual count. And so with this, we cannot observe if the client is not yet counting, right? So in this case, we need to agree with the client the timing of the inventory observation, as we need to match our observation date with the client's count date. Okay, like I said, there's nothing to observe if the client is not counting. So this is kind of like an exception to the rule. We do need to clear with the client the timing of our inventory observation. So that's Charlie. Number 45, upon discovering material misstatements in a client's financial statements that the client would not revise, the auditor withdrew from the engagement. If asked by the incoming auditor about the termination of the engagement, the predecessor auditor should remember once again that this communication can only happen if and only if the client gives permission. So therefore, the predecessor should suggest that the incoming auditor obtain the client's permission to discuss the reasons. Okay, so that's alpha. Number 46, analytical procedures used in planning an audit should focus on letter A, reducing the scope of tests of controls and substantive tests, letter B, enhancing the auditor's understanding of the client's business, letter C, assessing the adequacy of the available evidence, or letter D, providing assurance that potential misstatements will be identified. Again, this is performed in the planning phase, and in the planning phase, it's all about getting to know the client. And so the use of analytics in the planning phase is intended to enhance the auditor's understanding of the client's business. Number 47, how does the auditor communicate the result of their work? How does the auditor communicate the result of the audit? Is it through management letter? Is it through the FS? Is it through the audit report? Or is it through the engagement letter? We communicate our results, of course, through the audit report, which contains our audit opinion. So we're already talking about the results of our audit. So definitely audit report. Number 48, in making a decision to accept or continue a client, we should consider our competence, yes, our independence together with other ethical requirements, yes, our ability to serve the client, like our resources, our manpower, our time, that's also a yes, and of course, very important to look at the integrity of clients' management. So this shall be a yes to all of our choices. So yes to all of our options, so that's letter A. Number 49, after preliminary audit arrangements have been made, an engagement confirmation letter should be sent to the client. This engagement letter usually would not include letter A, an estimate of the time to be spent on the audit work by audit staff and management. Letter B, a statement that a management letter will be issued outlining comments and suggestions as to any procedures requiring the client's attention. Letter C, a reference to the auditor's responsibility for the detection of errors or irregularities. Or letter D, a statement that management advisory services would be made available upon request. Of course, we do not make use of the engagement letter to propose other engagements that we can give to the client, right? So it would not likely include statement letter D. And this shall be our last question for our practice set for this module. Question number 50. During the initial planning phase of an audit, we are on the initial planning phase. A CPA most likely would, letter A, identify specific internal control activities that are likely to prevent fraud. Letter B, inquire of the client's attorney as to whether any unrecorded claims are probable of assertion. Letter C, evaluate the reasonableness of the client's accounting estimates. Or letter D, discuss the timing of audit procedures with clients management. Now we have to exercise caution when we evaluate these statements, and we have to be familiar with the other phases of the audit. For example, when we inquire of the client's attorney, and when we evaluate the reasonableness of accounting estimates, this is usually done near the completion of the audit. Okay, so this is done at the completion phase. The identification of specific internal control activities is done already after accepting the client, when you are now assessing control risk. Okay, and if you intend to rely on the controls and testing internal controls, it's already in the testing phase. So therefore, this leaves us with letter D, discuss the timing of audit procedures. But then this might, run counter to what we have been saying, that we have to inject some element of surprise, right? But we do have to acknowledge that for certain procedures, we simply talk about the timing of the procedures. Like say, for example, when do we observe the inventory count? Okay, because it is something that we need to discuss and agree on with the client. And when do we start, for example? When are we expected to wrap up our audit, for example? So just broad discussions on the timing of the audit procedures, not necessarily the details of the procedures. So this will render letter D as, surprisingly, the best choice and our answer for question number 50. And there we have it. We have finished 50 questions. Thank you so much for finishing this segment with me and for answering the 50 items with me for this drill. I hope it helped you practice answering multiple choice questions for preliminary engagement activities, planning, and materiality. So once again, thank you so much, and I hope to see you in one of our future videos.